and Harvey Norman weaker.
Okay, let's whiz you along to Chris Weston at IG Markets in Melbourne. Chris, really interesting now. If we look at the kind of risk appetite for investors, just so close now to reporting season on Wall Street, kicking off indeed officially tonight our time. How are you judging sort of the lead up to that? Because it's been a kind of a confusing washout from non-farms over the weekend.
Yeah, it has. I mean, I think what's interesting here, and it's like the last couple of reporting seasons that we've had in the US on the quarterly basis, that expectations have been low. Markets have been falling into the earnings seasons. If you look at Alcoa today, I mean, I think the consensus is we're going to see them earn 5.7 cents on the EPS line. You know, 2 weeks ago that was something like 7. A couple of weeks before that it was like 9. So we've seen estimates being revised down. I just wonder. I mean, you've seen anecdotal evidence from a number of companies who have got exposure to Europe, talking about how that may play into the earnings reports. I think that's going to be something you're looking at very, very closely. And I think in the last quarter, we've actually seen the US dollar strengthen as well. So that may work negatively against any repatriation back. So I think the expectations are certainly lower. I mean, I think in terms of revenue for the quarter, it's expected to be down about 2%. And as we know, we've seen 12 seasons now, 12 quarters where earnings over those quarters have actually beaten expectations. Analysts always seem to have everything on a glass half empty side of things, but yeah, I think the QE free trade's just sort of sitting quite comfortably in the background still. It's bubbling away. John Hilsenrath, who came out with an article late in the US session. John Hilsenrath, who works for the Wall Street Journal, very much seen as the official voice of the Fed. The Fed speak through him to the public when they're not doing their testifies, etc. But yeah, he came out with an article which got the attention of the public towards the back end of the session. We saw euro look to push up, or let's say the dollar effectively weakened against most currencies when this article came out. So we know it's still bubbling away. Perhaps it's going to be down to the fact that when he testifies on the 17th and 18th in front of Congress, that could be a case that we may see things. And also, I think there was a Reuters poll on Friday. 70% of the 16 primary dealers, the guys who deal directly with the Fed in mortgage-backed securities and treasuries, are now saying that we're likely to see QE this year, and that again, that will probably support. But I think earnings season with Alcoa kicking off tonight, and probably more importantly for me, JP Morgan towards the back end of the week, the expectations are low, and that generally has been a bit of a catalyst. But of course, when we've got the European debt situations coming through, we've got Spanish yields at 7%. To me, that will always generally outweigh any kind of bottoms-up stories, I think.
Well, indeed. Now, just how do you play China this afternoon, particularly with the Australian dollar? It's got a little bit of a pop over 102. Does it hold on to that position? Is it reluctant to push much beyond it?
Well, I think it's more the fact that you know, the non-farms we spoke about on Friday, we had a lengthy conversation that the worst case scenario did actually materialise, and that was a slight miss to consensus. It wasn't enough to provoke QE3. People are calling the US economy a zombie economy at the moment. It's not really alive. It's not really dead at the moment. So that's really what we're seeing. But how do you play the Aussie? For me, big level down at 101.50, about 50 points lower than where we are at the moment. It's the uptrend that's been in place from the 1st of June. It's also exactly the 23% retracement from the recent rally we've had as well. So I think if we get down to those kind of levels, we want to see buyers coming in and stepping in there. I personally think the CPI, for the first time in a long, long time, is actually a bit of a non-event, to be honest, Carson. I mean, if for a long time the PBOC's had an inflation-fighting bias, clearly it's got a growth-fighting bias now. They want to promote growth where they can. That's why you've got to look towards the trade balance numbers tomorrow. You've got to look at the GDP numbers later in the week, where the consensus now is 7.7, down from 8.1%. We're likely to see that fall. And I think the actual range is something between 9.3%, which Capital Economics are pushing, down to Citigroup, who say there's going to be 7.3%. But I think the market, from a psychological perspective, is going to see anything with a 7 handle, even though it's slightly above expectations, as going to be a negative. We're back into that sort of worrying about China growth phase. So I think that, you know, people have moved away from inflation being an issue in China, where we've seen food prices coming off quite sharply. The PBOC have cut rates twice in a month, which sort of confirms that. And, you know, Premier Wen on Sunday came out and said that they're going to continue fine-tuning their economy, probably with a little bit more vigour. So I don't think, you know, it's something at 2.5%. The consensus is 2.3. Is 2.5% much of an issue? Not really. 2.7 perhaps not. So I don't know if this is going to necessarily be a massive driver. I think the market's looking at growth aspects towards the back end. But I'm a buyer down at 101.50. A close below that level, we're looking for parity, I think.
Right, 101.50 is that level, as you say. So a buy, sell or hold currency if there's no kind of clear steer for the local unit. What are you kind of putting your money into in lieu?
Yeah, well, I think, I mean, Euro's just the one at the moment. The fact is that they've come out and cut deposit rates, which is slightly more than what the market was looking for last week. You know, effectively, people have been talking about negative money market rates now. We're quite a big negative for Europe. I mean, they've got a Eurozone they've got a Eurozone conference, Euro ECOFIN meeting tonight and tomorrow. Expectations are low. We're not expecting a huge amount from that. The Finns are pushing for further collateral from this EFSF loan to Spanish banks. That's going to be discussed tonight, and it's to transcend that the loans are actually going to go through as a loan rather than aid, so it will act towards the Spanish debt situation. That will add to their deficit targets. So I think being short euro sterling at the moment on a technical break through on Friday, that's probably less oversold than everything else. So euro sterling being short at these levels, probably a stop around 80.25 is probably a good trade at the moment. And euro yen as well. I mean, the momentum now on a weekly basis has closed, and I think we're likely to see euro yen pushing lower. And if you don't want to play the euro side of things, you can play dollar Swiss, which has a very similar thematic as euro dollar. So I think dollar Swiss has broken out as well, and I think that's got further upside this week.
You heard it here. Thank you, Chris. Have a good afternoon.
Thanks, Carson.
Cheers.